Welcome, student. In next chapter of Grade 12 Accountancy, that is accounting for issue of debentures. Here we'll see the mechanism of accounting treatment by the companies when they issue debentures for the requirement of their funding of capital. Meaning of debenture. A debenture is an instrument by a company under its common seal as acknowledgement of debt. It contains a contract for repayment of the principal amount on the or on before or a specified date for payment of interest at a fixed rate until the principal sum is repaid. In short, it is a borrowed capital. For that, the company has to pay a fixed rate. According to Section 212 of Companies Act, debenture includes debenture stock, bonds, and any other security of company, whether constituting a charge on the asset of a company or not. Charge on the asset means the asset is kept as security. Features of debenture. A certificate acknowledging the debt owned by a company to the person named therein. Promise to repay the principal amount or on before a specified date. Promise of periodic payment of interest at a fixed rate and precise details of security, if any. There are basically four types of debentures. They are on the basis of security. Secured debentures, unsecured debentures, that means it is collateral. They have given certain assets for security. On the basis of redemption, redeemable and non redeemable debentures. Redeemable, that means the amount is to be paid back to the company and the amount is to be paid back to the debenture holder. On the basis of records, registered debentures, bearer debentures. Now, registered debentures cannot be resale. Same way, bearer debentures can be sold, and the person who is bearing the debenture can earn the interest on a regular basis. Last is on the basis of convertibility. Convertible debenture, in that we further have two segments, whether it is fully convertible and partly convertible, and the ones are non-convertible debentures. Now debentures are converted into equity shares. So on the characteristics on the agreement as per the financial requirement of the company, company may issue convertible and non-convertible debentures. On the basis of priority, first debenture and second debenture, as if for now you are going to study only first four types of debenture, these are for your theoretical approach. On the basis of coupon rate, usually debentures are issued with a specified rate of interest, which is called coupon rate. So the interest rate can be fixed, can be floating, and can be zero coupon bond. Fixed coupon rate means the amount of interest to be paid throughout the duration of the debenture remains same. The floating coupon rate means it depends on the market situation, and zero coupon bond, that means the entire amount is to be paid in times. So interest is not paid, only the amount may be doubled or maybe three times. Terms of issue of debenture, face value or the nominal value. Nominal value of debentures determined by the company and mentioned on the face of debenture certificate. Issue price, the price at which debentures are issued by the company. It may be issued at par, that means the face value. Issued at premium, that means value that is greater than face value. Issued at a discount, that is value that is lower than face value. For example, if the face value is 100, it is issued at 100 only, then it is issued at par. If the face value is 100 and if it is issued at 110, then it is said that it is issued at a premium. If the face value is 100 and the discount is issued at 90, then it is said that it is issued at discount. Redemption at par. Now, redemption is a process when the company takes back the debenture holding rights and pay back their amount. So, redemption at par, that means when the debentures are redeemable at the same value at the face value. Redemption at premium, that means when the debentures are redeemable at an amount greater than the face value. Subscription of public issue of debenture. Full subscription, that means number of debenture applied are equal to number of debenture offered to the public. Under subscription, that means number of debenture applied is lesser than the number of debentures offered to the public. Oversubscription, that means number of debenture applied is greater than the number of debenture issued or offered to the public. Now we'll look into the journal entries. When the application money is received, the journal entry in the books of company's account will be bank account debited to debenture application account. That is the amount received on application of debenture. Next is on allotment of or transferring application money to debenture account. So debenture application account debited to debenture account. That means the amount of capital is now funded. So debenture application account is closed over here by making it a debit entry. On allotment for making due allotment money. When the allotment money is asked, so debenture allotment account debited to debenture account. On receiving the allotment money, bank account debited to debenture allotment account. For making due call money, debentures, first call or second call, whatever it may be, account debited to debenture account. And on receiving of call money, bank account debited to debentures, first or second call account. Issue of debenture at a premium and redeemable at par. This is one of the case when the debenture is issued at a premium, but it is redeemable at par. That means it is redeemable at a higher rate. At that time, the excess money is to be provided, and that is called security premium account. That means here the company is at profit when it is issuing the debenture at a higher rate, say 110, and redeeming at par, that is say 100 rupees. So the journal entry will be debenture application account debited to debenture account to security premium. This is when the premium is collected on application, and the excess amount, that is security premium, will have altogether a separate account, that is security premium account. If the premium is called along with the allotment money, then in first entry there won't be security premium, only debenture application to debenture account. And when it is called on allotment, the journal entry will be debenture allotment account debited to debenture to security premium. So when the security premium is called on allotment call, if the premium is demanded along with the call money, the entry for making due call money will be debenture call first or second call account debited to debenture account to security premium account. Now we will see the journal entry of issue of debenture at a discount and redeemable at par. Now discount is the amount that the company is at loss. The company is issuing the debentures at a lesser price than the face value. So obviously the discount on issue of debenture will be debited according to nominal rule. So journal entry will be debenture allotment account debited, discount on issue of debenture account debited to debenture account. Same way the method we use security premium that has a credit balance, the discount on issue of debenture will be also altogether a separate account and it will have a debit balance. For receiving application money, bank account debited to debenture application account. Now, issue of debenture for cash at par and redeemable at premium. Here, We are issuing the debenture at par but redeeming it at premium. So here the company will obviously at loss and the amount of premium will be considered as loss on issue of debenture. So debenture application account on allotment of transferring application money to debenture account, debenture application account debited, loss on issue of debenture account debited to debenture account to premium on redemption of debenture. Here the amounts premium on issue of debenture and loss on issue of debenture, these amounts will be same because the company is beforehand knowing about the redemption process and company has to bear the loss of redemption, the excess amount of debenture. So at the time of allotment only the provision has to be made. Next is issue of debenture for cash at a discount and redeemable at a premium. Here the company is at profit when the debentures are issued at cash, that means at a par value, but the redemption is at premium, that means they are paying more amount. Bank accounts for at the time of receiving application money, bank account debited to debenture application account. On allotment for transferring application money to debenture account, debenture application account debited, discount on issue of debenture account debited, loss on issue of debenture account debited to debenture account to premium on redemption of debenture account. Here, the amounts of premium on redemption of debenture and loss on issue of debenture are the same amount, but there is one more loss when the debentures are issued on discounted price. So we are taking less money from the debenture holders and paying them more money. So here the company is at double loss. Next is issue of debenture as a collateral security. Collateral security, that means we are giving some secondary security in addition to principal security for taking loan. Now sometimes the debentures are given to financial companies for taking up loan. So for that debentures interest is not payable, and when the loan is repaid the debentures issued as collateral security shall be released by the lender. That means that debenture certificate should be again handed over to the company. If the company fails to repay the loan and the lender is unable to recover the loan amount from the principal security, he can sell these debenture in the open market to realize his loan. That means if the company is unable to pay on time, that means the terms and condition as per the agreement. If the company is unable to pay the loan, the debenture holder can sell those debenture in open market. Accounting for debentures as collateral security. When when the company is issuing the debenture as collateral security, no separate entry is passed. When company records the debenture issue as collateral security, only one entry is passed where a debenture suspense account is open. So the journal entry is debenture suspense account debited to debentures account. The entire debenture stock is considered in suspense account because no interest is provided on it. Issue of debentures for consideration other than cash. Sometimes it happens to fetch or to source out assets. The company is unable to pay amount in cash. In that case, company can issue debentures for that purpose. A company can issue debentures for purchase of an asset. So fixed assets account debited to vendor's account. That means the vendor is facilitated with the amount of debentures. Sundry assets account, goodwill account debited to sundry liabilities to vendor's account to capital reserve. Here, when the entire business is purchased, purchase consideration is counted. Purchase consideration is none other than the net asset, that is, total assets minus total liability. If the purchase consideration is more than the net asset, the difference is goodwill. Same way, if the purchase consideration is less than the net asset, then the difference is called capital reserve, and that amount is either debited or credited as per the case may be. Here, the purchase consideration also can be made in terms of debentures. So, this happens when any company takes over other company or small firms, they can issue to the vendor the debentures instead of cash. For issuing of debentures at par, vendors account debited to debentures account. Here the vendors are either the vendor of asset or the vendor of the company. When the debentures are issued at premium, vendors account debited to debentures account to security premium. Here the number of debentures will be low because the amount is adjusted with the premium amount. So number of debentures will be less in number because the value is high. Same way, if the debentures are issued at a discount, in that case, the number of debentures goes high. So the journal entry will be vendors account debited, discount on issue of debenture account debited to debenture account. Here the number of debenture will be increasing, and also a working note should be prepared in the same manner which you can see on your screen. Amount payable divided by issue price, then you will get the number of debenture. So if the debentures are issued at premium, the number of debenture are less, and if the debentures are issued with discount, the number of debentures will be high. Next is writing off or discount or loss on issue of debenture. So how this discount or loss can be written off? It can be taken from capital reserve account, or it can be divided among the number of years and can be charged from profit or loss. So these are the two ways by compensating the discount or loss on issue of debenture. So here, when the debentures are at loss, are compensated through profit and loss account. The journal entry will be security premium account debited to discount on or loss on issue of debenture. So in sometimes there is premium that can be used for discount or loss, and the difference can be charged to profit and loss account. Discount or loss on issue of debentures, how the amount can be written off. First is fixed installment method. In this method, when debentures are redeemable in lump sum at the end of specific period, in this case, the total amount of discount or loss on issue of debenture is spread equally over the period of life of debentures. So, amount to be written off every year is calculated as under total discount or loss on issue of debentures divided by the life of debentures. So every year there will be an equal installment that is to be redeemed or that is to be compensated as loss or discount on issue of debenture. Proportionate method. In this method, the debentures are redeemable in installment by annual drawings. In this case, the total amount of discount or loss on issue of debenture is spread over the period in the ratio in which the amount of debenture has been used in various years. So, in the numericals, the percentages will be given, the ratios will be given. As you can see, the example, the debentures are redeemed and outstanding amount is more in the first year, then lesser, comparatively lesser in the second year, and in the last year it is least. Same way, the discount is also written off in the ratio of 3 is to 2 is to 1. Interest on debentures. Now, interest is very important amount that is to be payable to the debenture holders. So, when the interest become due, the journal entry is interest on debenture account debited to income tax payable, that is tax deduction at source account to debentures holder account. So this income tax payable or TDS is collected from the debenture holders by the company, and it should be paid to the government department at the time of final adjustment. For payment of interest on debentures, debenture holders account debited to bank account. That means the actual amount along with TDS is paid to the debenture holders. When income tax is payable, income tax payable, that is TDS, account debited to bank. For closing interest on debenture account. Now interest on debenture is of course an expense or a loss to the company. So that will be debited to profit and loss account. So the journal entry is profit and loss account debited to interest on debentures account. This is a closure of interest on debenture account. Interest accrued and due. Interest accrued but not due. Now, here are the two complicated cases on which you will be having maximum adjustments. Interest accrued and due, that means it is payable and still not paid to the debenture holders. Journal entry is interest on debenture account debited to outstanding interest on debenture account. And the next one is interest accrued but not due. That means when the due date is yet to come, the journal entry is interest on debenture account debited to accrued interest on debenture account. And both are shown in the other current liabilities in the balance sheet.